Well, hello, Mr. Sablehouse. How are you?
Outstanding, Ms. Sablehouse. How are you?
Very good. Welcome to another episode of Married to Real Estate.
We got to be near 20 at this point.
We're getting in the upper teens.
Okay.
Yes,
All right.
yes we are.
Growing up every day.
Yes,
Yep,
we
got
are.
our driver's license.
Yes.
Can't quite drink yet, but we're okay. We're getting there, right?
Yeah, we're a little feisty and
Yeah.
a little grouchy. No. Well, but today we wanted to talk about a little hot topic. So it's a timely topic. Again, just to put it in perspective, depending on when you're listening to this, we are recording this here at the end of April 2023. And again, lots of clickbait, lots of hot topics around this, and that is some things that are going on with FHA financing and pricing, and I'm going to let you kind of take it from here. Just again, our goal is to educate, not to fire people up, but to educate what's happening out there.
Absolutely. So this is just a little mortgage 201 class to
201.
201. It can't be 101.
Okay.
Yeah. Just to explain to everybody, so when they hear about this, they can at least they have the knowledge to be able to speak about it. Opinions are what people are going to form, but the knowledge is something everybody needs to have, right?
Right.
So to go through and what's going on, it's with what's called the LLPA, which is the loan level price adjustments for different borrowers in this country.
Okay.
And I'll come back to that, but that's kind of the basis of what it is. And so the way this is all set up in the hierarchy of things, the government agency, FHFA, oversees the two government entities, Freddie Mac and Fannie Mae, which are in conservatorship with the government. And it's run by the government and managed by the government, and the guidelines are put out by the government. They used to be private industries until the great crash in 2007, 2008. Then they went into conservatorship with the government, and there's been talk about taking them out of that. However, my opinion on that is it will never happen. And the basic reason is the federal government makes way too much money off of these entities. There's a lot of money in mortgage-backed securities, and it's been ever since they've taken them in, they've made a lot of money, right? But anyway, so FHFA makes the guidelines for Fannie and Freddie, right? So 1, 2, stack 2. Then underneath everybody with Fannie and Freddie are going to be all your lenders out there.
Okay, and just to back up a minute, so when you say guidelines, those are guidelines that are showing what people or what levels people can borrow.
Correct. What are your loan ratios?
How much money do you need to make?
Right.
Okay,
exactly. All that stuff, right? So the lenders have to meet the requirement of Fannie and Freddie if they want their mortgages guaranteed by those two entities, which means they would guarantee to buy them.
Right,
when the time comes, because they're always moving their mortgages. And if they meet all these guidelines, then they're approved by Fannie or Freddie, right? So it's an approved loan by them. So all the lenders have to play by the rules of Fannie and Freddie, which has to play by the rules of the FHFA.
right.
So the FHFA is a federal agency that just came out with a new guideline to the LLPA. Right?
Okay.
So,
and most people don't even know that this stuff goes on, right?
That's exactly. So LLPA is loan level price adjustments.
Right.
So if Lisa Sablehouse makes $1 million salary, and she's buying a $500,000 house, and she's putting 50% down on that property, she's going to go into the matrix, into a grid at this one. Your rate would be this based on that, right? And they make adjustments. Now, if Lisa Sablehouse made $70,000 and you're buying a $650,000 house and you're only putting 5% down, and your credit score was 740 instead of 820, you would fit into a different place.
A lower spot.
Into that grid, right? So everything's a grid. Everything goes into the grid, and there's risk mitigation priced into that grid, right? So currently, if somebody has a very low credit score and they're putting very little money down, they would be a higher risk, so they're going to have a higher rate, right? And it's going to stay that way. That it's not going to change. So the good borrowers are still going to be at the top of the level, and the people that they're trying to
riskier borrowers
are going to be at the lower level of that scale, right? But what they're doing and what the FHFA has come out and said is we're going to make adjustments to close the gap a little bit, right? So the higher end isn't going to get as great as a break as they did, and the lower end isn't going to be penalized as much as they have been. And what this is going to mean, it's not like, and this is going to start in May 1st. You're not going to go to your mortgage company and you're going to say, okay, I want to apply for a loan. They're going to say, okay, well, you're a good borrower, so you have to pay X more, right? You're going to get a number based on what this new grid adjustment is. Now, it is going to change, but it's not, again, you're not going to say, okay, you have to pay $300 more a month because of this. It's just going to give you a different place in that grid. In the rate.
You're in the grid, and this is your rate and terms.
Exactly.
And and most of the time when you're getting those from your lenders, where we advise our clients is, if you talk to one or more lenders and you compare their fees and compare their rates, it's still going to be that people will still be doing that. It's just that the difference between a very good borrower versus a more riskier borrower, instead of it being maybe a point difference, maybe it's only a half a point difference.
Correct.
Okay.
So they want to change the risk mitigation a little bit, right? And make it so that the more riskier borrowers, marginal buyers, have more of an opportunity to get into the market. And
a lot of that is first-time home buyers, especially right now with housing prices being so high.
Mm-hmm.
Right.
Yep. So the one thing to me where I would definitely recommend everybody, and we talked about a little bit about this last time, no matter what you're doing with a conventional loan, ask your mortgage broker or your mortgage lender about an FHA loan at this point. If you're not putting 20% down, compare whatever it is conventional to what's going on with FHA, because the rates are a little better with FHA, and they just lowered that mortgage insurance premium number there. And
more competitive.
And they're going to be more competitive. So even at 5% down, 10% down, I would have that conversation about what it looks like if I went to an FHA loan as opposed to conventional.
Right. So it isn't a rock your world somewhat topic. It's definitely touchy, which is why it's huge clickbait. So what we're here to just tell you, education-wise, is just be informed. We're happy to talk to you about your individual circumstances and comparing with lenders. And always, it's a lot of money to purchase a home, and we're here to guide you each step of the way.
Yep.
All right.
Love to answer your questions.
Absolutely. So visit us at sablehouseteam.com, and we're here to answer all your questions.
Thank you.
All right.